big question is the real estate market and the housing market specifically going to fall apart and drop this month? Are numbers and revenues going to go down? That's the big question. That's the big question that home buyers are asking. It's the big question that investors are asking. If you're a fix and flipper, if you're an economist, everybody wants to know. But more so, our viewers want to know. You guys, one thing I know about our viewers is the fact that if you're watching our content, you have interest in real estate development, multifamily or single family, buy a piece of land, build a house, and generate profits from doing it. And is the time now, is right now the time to actually move forward in doing so? And it's a big question that people have been asking, and I want to give you guys some insight. I want to give you guys some real data. And then at the end, what I'd like to do is actually tell you guys and explain to you guys how to attack the remaining months of this year. Remember, we got 10 months left, guys, ladies and gentlemen. And so I want you guys to win this month, this year. And I'm going to set strategically to help you guys set up what you guys need to do with the information that I'm going to give you guys. So one thing that you guys got to understand is that constructed homes are down by 50% year over year. So what we were building a year ago, the quantity of homes being built in the US a year ago is down by 50%. That's a huge number. Now there's pros and cons to that, right? Like most people would sit back and go, okay, well that's a bad thing. The housing market is robust, is bust, and we shouldn't be building, right? Well, here's the good news, is that because it's down 50%, think about the momentum creation that it's going to take in order to get builders, the big builders like D.R. Horton, Toll Brothers, all these guys. Think about what it's going to take for them to be able to gain that momentum again, okay? Which means that you guys, small builders, have an opportunity to fill that void and profit from it while they're starting to gain momentum. Because overnight, you can't just slow down by 50% and then start acquiring land, getting it entitled, subdividing it, getting all the permits, then going back to market, pre-selling these homes. And so that's the second thing, is that backlog of pre-sold homes is down by 32%. Why? Because new builds are down by 50%. So obviously the backlog availability, there's just not even a backlog availability for buyers. They're not marketing as much, and there's not enough availability for them to even market and sell. So it's going to be down. If house production is down by 50%, then backlog is down by 32%. That means that there's a gap there that people are still buying more so than what is being built. And so that's a positive thing. Now revenue as a whole in the industry is up by a recorded 4% of net revenues, and over 5.1% of gross revenues are up. They've increased, and buyers' confidence is strong. Now, the reason that they believe that the buyers' confidence is strong is because of the long-term fundamentals are still very strong in the real estate market. So when you think about the economy and you think about the long-term economics, the fundamentals that build our economy are still very strong right now. So hence, that's why the buyer's confidence is so high. People know that interest rates are high, higher than normal. And what economists were projecting was, they said, we should expect in the first quarter of 2023 to see about a 1% growth in the residential real estate market sector. And ladies and gentlemen, we are at an 8% growth year over year. We have exceeded economists' projection by over 7%. We're at exactly 8.1%. So we have succeeded the economists' projections by 7.1%. And so we're doing exceptionally better than what they had thought. Now, the good news is that the mainstream media had made a mockery of the housing market, and we had been talking about this. Now, I honestly did not think that interest rates were going to continue to go up and go up and go up, even into 2023, which we saw a hike of a quarter basis points at the beginning of this year. And in spite of us seeing that increase of a 0.25% at the beginning of this year, mortgage rates were expected to go up along with interest rates. And what ended up happening is that mortgage rates actually went down. And so a 30-year fixed mortgage is projected throughout 2023 to average about 6.1%. But in 2024, hence election year, doesn't matter if it's Democrat or Republican, the president wants to feel like a superhero that, especially on a 4-year term, that they made the economy robust and incredible. And so they're projecting that it's going to be a 5.4% interest rate in 2024, which I agree with. I even think that it has the potential to go down as low as 5%, 5.1% in 2024. But we'll see, right? Like, we don't have a crystal ball. We don't know exactly what's going to happen, but we do know that mortgage rates themselves are going down. And so on a 30-year fixed mortgage, they're projecting 6.1%, 2024, 5.4%. Now, the National Association of Realtors, I like doing research with these guys. And look, guys, I'm going to tell you guys how to take advantage of all this. Right after we're done with this part of the video, before we end this, I'm going to explain to you guys how you guys can position yourselves for profits moving through the year 2023, okay? And so if you like that content, you want to hear more of it, smash that thumbs up button, click and subscribe to our YouTube channel, and I'll just continue going and giving you guys some information. Now, National Association of Realtors, guys, this was all the information that I just gave you guys came from Yahoo News, okay? Now, I'll tell you guys, the only one that is less than optimistic was USA Today. USA Today said that this is going to be a short-term a short-term deal. In spite of sales being up 8%, USA Today continues to pound the media, saying that 1 in 5 home sellers in the first quarter thus far have had to take a price reduction in their sales number. Now, look, ladies and gentlemen, I just finished selling 2 homes, and both of them were full price offers. So we didn't even have haggling on those, ladies and gentlemen. So yes, this was the biggest market gain since 2020, June of 2020. So if you guys compare where we are today and the 8% increase in year-over-year sales, that is the largest increase that we've seen since June of 2020. So we're sitting in a good place right now. Now, the National Association of Realtors says that month over month, across all 4 regions, ladies and gentlemen, all 4 regions. So it doesn't matter where you are across the country. It doesn't matter what regional area you live. If you live in the West Coast, if you live in the East Coast, if you live in the Midwest, if you live in the South, if you live up North, it doesn't matter. All 4 regions across the United States had increased month-over-month sales in the month of February, which is unbelievable. And the National Association of Realtors believes that we have the projected economy is very good, and we have expectations to have a very robust 2023 throughout the entire year. So great information. Now, what do we do with this is the big question. Do we take this information and just put it in our pockets and do nothing with it? Or do we generate some profits and figure out how to do so? So I believe that we're going to have a great year. I do believe that there's going to be some bumps along the road, but we were projecting last summer that interest rates would slowly start to stabilize along with mortgage rates throughout 2023, and hence as we moved into 2024. Now, in all honesty, I thought that we were going to see a little bit more bloody turf in the real estate market for just a little bit longer. In fact, I was hoping so. And I know some of you guys are sitting back going, really, Jerome, you were hoping for the water to get bloody again for a little bit longer? Yeah, because when the water's bloody and there's blood on the streets, ladies and gentlemen, there's opportunity for profits. And so one of the big things is I was hoping that the market would get bloodied up a little bit more to see more foreclosures, more price reductions, stabilize our inflation a little bit more. We have seen a little bit of stabilization with inflation right now, but where is this going to put us in a year from now, 2 years from now? Are we going to continue seeing mass inflation is the big question, right? And if we do, housing is going to go up. Hence, the need for affordable housing is going to continue. So on the affordable housing sector, there is a massive need, ladies and gentlemen. I can't even explain to you guys what we're dealing with in the multifamily sector, in the affordable housing space. It's really tough for people to find affordable places to live. So we're going to see opportunity in the affordable housing market for a continued number of years. I think we have probably a decade, if not 2 decades, of affordable housing needs that we are going to have a really tough time fulfilling. Now, how do we get to that place where we can invest in affordable housing and have the bandwidth to invest in this stuff? Build upper middle class houses. So you do the opposite, right? You take money from the more affluent. Okay, the 24% of home buyers that are buying homes in excess of $400,000. Cash purchases are up by 14%, ladies and gentlemen, 14%. There's more cash buyers now because money is expensive, and cash buyers are smart. If money's cheap, why would they use their cash? They bank it, they use it to make more capital, and so instead of utilizing their money, they'll use someone else's. But when money's expensive, why would you use someone else's money when you have the money in the bank? And 24% of our home buyers are affluent. So I've been telling you guys, buy dirt, guys, and build homes. You could generate 6-figure profits. Now, we've always marketed on an $80,000 profit margin. I say that on average, our students are making between $135,000 and $200,000 per build. And we have that documented throughout the last couple years. And so right now, we have 5 homes in the next 60 days that will be fully completed and sold within our inner circle. We have over 400 members in there that are active right now. We have 5 that are nearing completion, and all of those will make between 180 and 209 on profits projected. I think they'll actually make a little bit more, which is cool. Now, most of them are seeing a lot of cash buyers, and we're seeing the upper middle class of affluency. Hence, a lot of them are the retirees, empty nesters, people that are at that age where they've worked a full career, they have a nest egg, they have a 401k, they have a little bit of expendable capital, and those are the people that are still in the market right now competing in real estate. And so you guys should take advantage of that market, because the mass builders like Toll Brothers, D.R. Horton, Pulte, these guys are hitting the median, guys. These guys are mass marketing to people that are buying homes under $400,000, and that's the market. A little crushed, right? But there's a need market, and those guys are even starting to see inventory move, and they're starting to see the market flourish. But it's going to take those guys some time to get back into this market, giving you guys an opportunity to start building some homes. So if you guys have interest in working with my team and me to implement this strategy, you guys got to get on board, because the window of opportunity is narrowing, guys. It's narrowing, ladies and gentlemen. And so you don't want to take advantage of increased prices, because that's what's going to happen. Fix and flippers, all you wholesalers, all of you guys that are sitting back wanting to invest in real estate, this is the time, because prices are still lower and there's still scarcity in the market. As long as there's scarcity in the market, there's opportunity. So take advantage of it. The more affluent, they're buying. And so position yourself to win by marketing and selling off to the upper middle class. Take that capital and invest in an affordable housing model. Not low income, just an affordable housing model. That's where profits are. In the affordable housing market, you'll be able to make passive residual income in that market. Okay? But you have to poach money from the more affluent, ladies and gentlemen. They have your money. It's in their pockets. How you perform and how you execute is up to you. What you do to execute is going to be up to you. Now, we have something that's been working for us. This is our 3rd recession. I've been talking about how this market's going to go. I will tell you guys, those who are action takers and implement the strategies that we've been marketing for the last 2-3 years are going to have massive wins. We're going to take that capital, we're going to position it into the multifamily affordable housing sector. We have some people that are executing the industrial warehouse space, which is still one of the most sought after asset classes as well. Those 2 sectors, ladies and gentlemen, are going to be the 2 places to park the revenue you generate over the next 2 years into, so that you can make long-term massive gains because of the tech growth, because of massive online distribution and the need for warehouses, data centers, all of that stuff there's a massive need for. But more so than those, there's a massive need for an affordable housing concept. Ours works. We've already proven it. And so, ladies and gentlemen, implement everything that we put in this video so that you guys can take advantage of the market conditions right now. Now, look, ladies and gentlemen, if you like this content, give me a thumbs up, give us a little love back, smash and subscribe to that YouTube channel, and I'll continue doing the research, giving you guys the data, and giving you guys opportunities to come in and crush your real estate careers. Ladies and gentlemen, you guys go out and make it a great day. God bless you guys, and continue compounding your success.